Hey, welcome to the closing beat, everybody. Happy Thursday. Hope you're having a good day here so far. Did you see the stock market today? A little higher. That make you feel good? Feel good about the markets moving higher here today. This is just a quick show that we do. Call it the closing beat. Just covering the stock market, the good, the bad, and the ugly. And, well, we're financial advisors here at Jazz Wealth. We just like to watch the markets on a daily basis, keep you updated, let you know what things are going on there. Hope you'll check us out at jazzwealth.com. We also put our portfolios right on our website, getting ready to update that a little bit. But you can actually see the different funds. Think of them as little mutual funds, exchange-traded funds. However, we own them. We manage them and make the decisions. So number one, we can choose not to charge you for them. So they're expense-free, no costs involved with that. And also we get to tell you how things are going. See, we do classes every week, every Thursday night, tonight included. And once a month, that topic of the class is, how'd the portfolios do? How's the market doing? What adjustments did we make? So you can sort of learn how the process works along the way. Think of it as getting to sit next to the mutual fund managers. Learn how things work. Well, tonight our class is actually, we're going to do a real good geeky one on this inverted yield curve, the stats of how often they lead to recessions. We're actually going to show each recession on charts there, show you how we perform going into it, and share some things that, well, they don't talk about publicly that may affect how you look at all of this here to kind of show the media hype and sort of things wrapped around that. So we're going to get a little geeky tonight. Grab a glass of wine or your favorite drink and come join me for a short class. I've got some slides prepared, as I usually do. Anyways, we're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your page, you could take a shot. Tell me where you think the Dow's going to close next week. If you're closest without going over, Price is Right style, we'll send you a $100 gift card in the mail. That's the only communication we'll have with you. If you're not one of our customers, we will not market to you, solicit you, or sell your information in any way. We really don't care. We're just playing a game. You guess, we'll send you a $100 gift card. If you're lucky, it'll be two $50 gift cards. See, maybe you could share one with somebody. I don't know. We'll see what happens. Anyways, let's talk about the stock market. You got 326 on the Dow, big day for the Dow, 36 on the S&P. NASDAQ got 116. The Russell was even higher today off the 10% level there. We got news that China's decided they will not retaliate immediately for those tariffs that we're going to put on China here soon. So keyword immediately got left out of the headlines there. They didn't say they wouldn't retaliate. They just said they wouldn't retaliate right now. They're going to sort of measure their options and see what they want to do. Part of that is taking a look at their tech sector and seeing how they can improve so that they're less reliant on the U.S. Didn't hear much about that today. That was kind of interesting. Everybody was like, oh, they conceded. China bowed to the U.S. No, that's not how I read it. Anyways, President Trump tweeted out too. It's sort of like the week of tweets. I mean, I know it's the presidency of tweets and everything, but the markets are really moving based on his tweets. And so I want to highlight that for you here as we go over to the charts. But President Trump tweeting out that they were going to do some trade talks today. Didn't hear anything about it after that. How did it go? Did it go good? Everything good? Bad? Did they even talk? What was the deal there? We didn't hear that. He also said, we're going to have a talk at a different level there. So those were his comments there in a tweet that helped the markets actually move higher on that tweet news. We still didn't get above the resistance area, but for now everybody's like, oh, cool. So everything's good? I thought everything was bad. You said no? Oh, okay. Well, everything's good. That's okay. Great. So they're happy again. So sort of a risk-on type day. Also, you have bonds. You have bond prices moving lower. Well, let's just get ready here and start moving over to those charts so we can show you. We'll take a look at that. It's the end of the month. You got a lot of rebalancing going on because imagine the markets wiggling back and forth in this area as they have. Good reason for mutual funds, ETF, or mutual funds, hedge funds, and any active ETFs to do any rebalancing if they have to, or passive as well. After hours here, apparently there's going to be a new military branch called SpaceCom. That's official. That was just announced actually, where we can fight wars in space. What could possibly go wrong with that? Huh? So we'll see. Anyways, let's go over to the charts here. Let's just dive in. We'll make this happen today. Here's the S&P 500. We moved back up into these highs over here. We're still under the 50-day moving average, still under that known resistance that everybody and their mother is looking at right now because they know exactly where the markets are getting stuck over and over again. In my opinion, and I don't share my opinion a lot, I like stats, but I kind of feel like this is the last chance. If we don't get above those highs, look out below, at least in the short term. What I did is I put a little bit of a note here. The actual arrow points all the way back to, let's just zoom in. There you go. So if we go back to last week, Friday, right here is 11 a.m. I marked it on the charts there so you could see the very moment that President Trump took the markets down last week, that caused our big, massive Friday sell-off. Well, today we actually closed above that. So we usually look at technical areas, but now people are looking at tweetable areas. When did tweets come out, and have we recovered from those tweets? Meaning everybody that was bearish because of what he tweeted out is now officially, well, negative. They're losing. They're in a losing position. They got to make a decision there. So we did close above that here today. Call it what you will. Looks good in the short term. We still have this resistance area to deal with. I think that's going to be something we've got to focus on there. It feels like the S&P is saying, go ahead, give us a deal. Let us know there's a deal, and we'll gladly break above this and go back to normal. If you keep toying with us that there is no deal, the markets are sort of letting him know, you could tweet anything you want, good or bad, we're going to respond adequately. If there's no deal, we have no reason to really move above highs. So there's got to be some really strong talk about there being a deal, potentially having a deal, and we'll see. Now we're going into September, and the last 3 of the 4 years, September, have been negative in the S&P 500. So not typically the month that you look to see being a positive one there. We'll, of course, cover that in our update there. Cover a few stocks we've been watching here with you guys. ATVI, nice. You like that today? We talked about this building momentum. If you don't see it building momentum, then you feel like it's just dead money still. It's pretty good considering that today people were focused elsewhere and they were focused on semiconductors and other things. So to see that one still doing well today, I think was really good. Speaking of semiconductors, that's your area today, right? If you have semiconductors between Micron, Xilinx, AMAT, just go across, go across and look at all of them. They all had really good days today. QCOM had a good day as well, almost 3% on the day. Intel having a strong day as well. You just look across the board, everything looks good. In the S&P 500, you got Philip Morris and Altria. MO is the symbol there. Both headed lower on the day. Some of the weaker areas there were investigating their marketing practices for Juul. The way they market them to say it helps you quit smoking. What are they should be allowed to say that? There's some details in there that they're working out. If you look at the Dow's back to these highs as well. Same concept there, just moved up to those highs. Same comments, just different index there. You got UNH moving higher. We've been talking about those puts there. Those 210 puts are now basically worthless, 60, 50 cents or so in there. Yeah, that's a good example of why you don't buy out of the money puts. You ever done that? I've done it. You ever buy out of the money puts, out of the money calls? It's a lottery ticket. You had a 26% chance of being right. At this very moment, you are basically lost it all if you played the game there. Intel in the Dow was one of the bigger gainers on the China news, semiconductors, things like that. You also had Caterpillar in there, a little higher on the day. Nike was worth looking at there, 2.25% on the day. Just all based on that China news, positive momentum here to the upside in the short term. If you look at the NASDAQ, well, you're not going to see anything now. It just fell apart there. So the NASDAQ moving up towards those highs as well, looking pretty good in there. I don't really have a lot to cover in the NASDAQ. Still in that sloppy range there, maybe showing just a touch more strength to the upside than you would think there. But I don't really have a lot of names. You can go through the NASDAQ 100, take a look there if you're interested. I would point out, we're falling apart here. We're going down. I would point out J.B. Hunt. If you look at J.B. Hunt, 3% gain on the day. That was one we've been pointing out the last couple of days, noticing that it's holding up in the transportation sector. It was one of those starting to show a little bit of strength. It's kind of cool how you can watch that. I've tried to show you on the downside and show you on the upside. When you can identify these little moments of weakness there, UNH and IBM and Workday and stuff, when you can notice those little moments, it's just a matter of timing there. People say, oh, you can't time the market, but if you're really focused on it, you kind of focus in on these areas, you can at least see which stocks are showing weakness versus showing some strength there. So that's pretty much all I got there in the NASDAQ. You got the yield curve still inverted there, but you got bond prices headed back down. Remember, for the TLT, through this stretch, this month, it was like the 22nd through September 22nd, only 30% of the time is the TLT positive, so it's moving lower. It's still technically positive, so it doesn't count just yet. But that's good news for the markets. Bond prices heading a little bit lower. Stock market prices head a little bit higher. At least you kind of saw that today. But the yield curve still inverted. We're going to cover that in some cool detail tonight. Really looking forward to that class. So that's bonds if you're focused on that. Semiconductors higher. It still feels like it's waiting though. Notice how it was like, all right, it's a good day. You sort of owe it to the market, risk on a little bit, but not any overcommitment or true excitement here. Still feels like people believe they're going to get this little discount here on the trend line there. It's just a little discount, but. Gold, little pullback in gold, gold-related stuff today. GDX being the gold miners, GLD being the gold well, the direct play for gold as far as ETFs go. So a little pullback there. Names that had been stronger, like Newmont, you had a strong move on that one, almost retracing all of it there. Silver, you were to pull up silver, a little down day there, just a little extended in the short term. People maybe just taking a little bit of a break there. You had crude oil inventories come out today. Prices were a little bit higher, still unable to break above that range there. Sure feels like it wants to, doesn't it? Been kind of highlighting this range here for oil, and after the draw in inventories today, and generally, I mean, a little hurricane news in there as well. You got the price of oil just hinting that it wants to break there. Regional banks, a little bit higher today on the lower rates, or I'm sorry, a little higher on the higher rates, I guess is how you would say it. 2.12% gain on the day. If you look at retail, a lot of follow through, a lot of action over there because of the retail earnings. I've got a whole list. Got this whole entire list here that you can we'll go through if you want on all the retail names. Did some homework today, so we'll stick around and do that at the end in case you're not interested. Transport's coming off the 10% area. This is the market except in reverse. You kind of feel like that 10% pullback area better hold this time. So far so good, but we better get a move on here or you feel like people are going to pull the plug on transports as well. So far so good. And somebody mentioned Argentina, so I thought I'd pull that up for you. Argentina's still very weak, made new lows today. You know, imagine if that was our stock market. See, that's Argentina right there on the screen. Ticker symbol AGT. Bit of a rough one for them. The Russell back positive here for the week, at least as of today. Remember, for the last 4 weeks in a row, it has lost at least 1% or more and is now lagging the S&P the most that it's ever lagged in 10 years. Got an interesting way to show you that, maybe in a class. Just right off that 10%. Just that 10% line we've been highlighting, right off of it. Yeah, you just kind of hope it gets going. If you're a stock market bull, you're like, let's roll, baby. Let's go. As far as 50-day moving average, 43% of stocks are above their 50-day moving average, but unfortunately, it's still largely led by utilities, REITs, and consumer staples. So we need some of these other areas to get some help in there. Energy hasn't helped. It's actually gotten worse, only 11% above the 50-day moving average. So just kind of tough there. As far as new highs today, it's a good sign. You got 26 new 52-week highs, 6 sectors represented in there. You can really see the difference when you have a broad-based sort of participation overall in the markets. You can really see how you get new 52-week highs spread across the different sectors. You get a nice little bounce there. If you're a bull, let's hope that continues. If we're going to break through these highs, let's make it happen. We need to see that number increasing, more stocks in broad across more sectors pushing towards 52-week highs. We just don't have it yet. It's just not quite there yet. And I hate to be the guy that's like, you know, come on, prove it to me, show me, but we're trading inside of a range here. You can't blame any technical trader for saying, I don't know, I'm not too sure. We've hit this area, we just can't get above it. Prove it to me, man. Let's see what's happening here. So naturally, I'm sure tomorrow will be a very exciting day. We can follow along with that. You had some of the normal names hitting new highs again. You had Coke and Pepsi. We could show them, actually, if you want. So you got Coke hitting new highs today. They've been sort of chugging along there. You got Pepsi making new highs as well, a little bit stronger than Coke in general. You had Tyson hit new highs there. A little bit of bad news earlier in the day, but seemed to shook it off. 1.68% gain on the day. You only had 4 utilities. That's helpful. Utilities starting to take a little bit of a break. A little cautious, though, if your leaders start taking a break and that money doesn't rotate, you got a problem. Right now, we could argue rebalancing. Money just being rebalanced out of REITs and utilities, being put to work in areas where you're underperforming, and so you need to bring your allocation back to normal. If you're a mutual fund or like our funds and stuff like that, I could understand that. You've got Home Depot, the strong retail name. A couple of them. Strong retail names like Home Depot, Target, that were already strong. Those hit new 52-week highs. Dollar General was earnings related today. Dollar General, by the way, beat estimates. They beat on revenue. Their store sales were better than expected, almost by double, raised their full year guidance, and that was sort of odd relative to the other names in the retail space that reported earnings. I'd also point out Home Depot and Lowe's get a little boost for the hurricane. We got a hurricane coming through here, and there's a Lowe's right here by the studio, and that's already packed. I mean, so you just, naturally people anticipating a little bump in business there because of the hurricane. Home Depot, of course, strong as well. Good news, no new lows. meaning no new 52-week lows, not the stock. So looking pretty good there, if you like that, if you're trying to go with the bullish stance there. PayPal officially coming off our list. We did this 4 days ago. Average gain over the next week was 1.13%. It officially went past that today. 60% of the time it was positive by at least 1.3%. That did do the trick today. And Lind also, that was 4 days ago as well, 1.79%. Actually, that one has a little more to go. 84.6% of the time it's positive by at least 1.79%. So it's got one more day to actually break that record. It's not quite up. It's up 1.52% from where that stat actually begun. So let's keep it honest. You know what I mean? Jabil got the rare double upgrade today. So that's when an analyst says we're skipping the hold, we're skipping the initiated. Well, they don't do that. We're skipping hold, we're skipping the different categories, right? So they'll say it's either a sell, it's either a hold, it's either a buy, a strong buy, whatever. Different analysts have different ratings. And so JBL get the double upgrade from a sell to a buy. I forget who did that, by the way, but they said I think it was Stifel Nicholas. But they said Jabil's going to benefit from Apple's wearables. If that happens to have a little bit more of an uptick, that Jabil should do really well. Stock was up almost 8% on the day. Not bad there. All right, let's go through some of these. Best Buy. Best Buy reported earnings today. Earnings beat by 9 cents, raised their guidance for the year. Revenue and store sales fell below expectations, and that's pretty important there. A lot of people trying to blame the possible, trade war thing going on there. 15% lower on Abercrombie and Fitch. They lost 48 cents. They were expected to lose money, but they were only expected to lose 53. They lost less than expected. Revenue came in less, and store sales were flat. You see the difference already between Dollar General and these guys here. Dollar Tree reports earnings as well. They ended up just a little bit lower on the day, missed by 5 cents. Revenue did beat. Store sales were better. Overall earnings just missed in general. Williams-Sonoma. Oh, that's some expensive stuff there, man. It's a pot. Expensive pot. It's like those headphones that everybody spends money on. Don't get me started. You got 7% lower on Williams-Sonoma. Earnings came in above estimates. Revenue was basically better than expected. Store sales were better than expected. They raised their full year guidance, so I'm not sure what happened there. If I missed something, why that one pushed a little bit lower. Maybe margins. I didn't see their margins there. Box, this is Dropbox competitor, up 2.1%. Having a problem with customer retention. Other than that, not too bad. I mean, it wasn't horrible. Coming off the lows there, maybe people liking that discount. Do you like discounts? Do you? You got Box trading at a discount. So that was earnings related. PVH, this is Calvin Klein and the like. Stock was higher by 6% on the day. Revenue, earnings beat. They cut their full year profit going forward, have some concerns about China and the trade war thing, but that came out before we knew anything. So they already had their concerns. Trump came out today, of course, saying, yeah, we're going to talk. Yeah, we're talking today. It's good. China called. Yeah? Even though they said they didn't call, they're calling today. And no, we're going to work it out. So is he painting himself into a corner, or is this really happening here? Disney a little bit higher on the day by about 1%. So Disney said we expect their subscriber projections to grow by 20 to 30% of the households would subscribe to Disney Plus by 2024. UBS did a study, and they found that 43% of households said that they were highly likely to subscribe to the Disney Plus service. So either A, Disney shot lower with those numbers to try to make you guys happy, or B, people are really finding interest in Disney Plus. I don't know. I couldn't tell you. What else do we have? Ollie's Bargain Outlet. So the CEO reported the earnings there. They missed by 11 cents. Revenue was a little bit less than expected. They lowered their guidance, and the CEO said, it was a tough quarter. That was it. And he's like, well, this is a tough quarter. What do you want? They opened 5 new stores, and those haven't quite got online yet. So he's like, hang with us. But it was a tough quarter. I mean, that's shooting straight right there. No trying to beat around the bush. What do you want from us? It was a tough quarter. We missed earnings. Five Below, higher by 6% as well. Beat estimates there. Revenue was a little lower. Also uncertainty surrounding China, since I believe like 88% of what they have comes from China. All those toys and whatnot. So we'll see what happens there. That's all I have. We'll be getting ready for the class here tonight. A few more things to put together. Hope you'll check it out if you're one of our customers. Actually, this should be the first time that we're just live in the dojo. Notice you didn't get an email today. You'll just be in the dojo. There'll be an email when we go live that goes out, and if you're in there and you're just sort of looking around the dojo, it should just pop up, right? And I'll be like, hey, I'm here. So hoping that goes smoothly. We'll see you guys tonight at 8 o'clock Eastern time in there. Read somewhere historically odds are in favor of having good up rally before this long weekend, and historically the day following the long weekend, the Labor Day weekend, is positive. I believe it was 68% of the time. Did I say that earlier in the week? I don't know if I said that. I don't think I offered that to you guys. After a 3-day Labor Day weekend, 68% of the time positive. That's the Dow, by the way. Studying that one. Go back further. Cool. You're thinking about taking some swing trades in the tech sector because of decent news out of China? Would it be safer to see the sector officially break out? What do you mean by, where are you looking? Where are you looking there? You're looking for, I mean, it's not semiconductors. You're looking at tech stocks. I'm not sure I understand the term breakout. I don't see a breakout there unless you're looking at an individual stock. Adam says, I tried a little earnings play on stocks you mentioned the other day. Would have worked out, but Ollie's dropped 27%, still came out 2.75%. What do you do on those earnings plays, I wonder? Do you just buy stock and see what happens? Do you short the stock? You playing options there? What are you doing? What you doing? Hey, Carolyn, joining us there today. Going to join us in the class tonight. Love it. Do you think Ulta is oversold after earnings? How long until it rebounds? Did I have that stat for you there? I think I had a list of stats I forgot to share with you guys earlier in the week because this is all in my head. So little pop today, 2.14%. That's a tough one. I get it. It's holding up more than the overall retail sector, but there's a lot of resistance overhead, and so does the market. So these are very tough trades to take if you're a short-term trader because not only are you saying, I wonder if this stock or this sector will have get some excitement. There'll be some bulls that show up. But you're also needing the S&P to take off here as well. We're at a critical area for the S&P and many of the different sectors. So I think that's a tough one. I think my eye would be looking somewhere else, and I would bet that technical traders, they're also going to be looking elsewhere as well. That's a tough one. It's like Adobe the other day. We talked about Adobe showing that relative weakness, but the risk to reward just wasn't there. What do you have today? Tried, right? You try to see that weakness, but people are like, why should I short it? Is the risk to reward just not there? They go and look for other things to see what happens there. Sorry if I missed some of your questions. You guys are awfully typey today. You trust today's rally, very light volume pop. I think everybody doesn't trust where we're at, right? And for a good reason, right? We're up against these highs. There's this ceiling above us, and everybody has seen the ball hit the ceiling and fall back down. Why should it break this time? We need a catalyst. I don't know what it's going to take, but we need a catalyst. The market's just not going to float above those highs, and nobody will have a reason why, right? There's going to be something very solid. Maybe overnight, China and the U.S. go out to dinner in D.C., and they're hanging out, and they're like, you know what? Come here. Let's put it behind us, and let's have a trade deal. If that's the case, there's your catalyst, right? But I don't see it. Will September be a more active month in all the markets? Absolutely. Yep. Guaranteed. What do you think about, that's pretty much the only time I can say that too. And I should say guaranteed based on history, not guaranteed based on me going and moving the market or something happening there. You try to factor in political tensions like Hong Kong protests to predict the market going into the next few weeks. No, there's always something going on. No matter what statistic you look back at, go all the way back as far as you want to go, people go, well, this time it's different. Not really. There's always something going back to oil, gas crisis, wars. I mean, there's recessions, big recessions or great recessions as they call them. So no, there's always something going on. You can do it regionally, right? If you want to look at Hong Kong and kind of, I don't know if you trade over there, but if you want to look at things regionally, that's helpful. Yep. Friday, tomorrow, light day for econ news. All of it's basically behind us here. Everybody will be focused on D.C. and phone calls or whatever's happening over there. Yeah. So that's that one. Well, look at that. I think I covered all the questions there. If I missed them, I'm sorry. We'll try to hit them again tomorrow because we'll be back tomorrow to do this all over again. That is it. I have covered it all. I hope you have a great rest of your day. If you're one of our customers, I'll see you in just a few hours. We'll be in the dojo, 8 o'clock Eastern Time. Have a great day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.